We make a line here. The answer is 33,000. That doesn't mean that you add all these and get this 33,000. No, it means the debit side is 33,000 greater than the credit side. So let's just add these numbers. So we have 50,000. Let me just delete all this stuff. So we have 50,000. We have 7,000. We have 1,000. We have 22,000. The answer is 80,000. Total on balance is 80,000. While the credit side of cash is 40,000 plus 2,700 plus 1,900 plus 2,100. It's 46,700. Now we are just continuing this from here. So how much the debit side is greater than the credit side? You less 80,000 minus 46,700. Answer is 33,300. Right? And that is, of course, on the debit side. Right? So this step, if you do that, for me it's okay. If you don't do that, then it's obvious. If you write it down like this, so debit side is greater than the credit side. How much? 33,300. This is the balance. We call this carry forward balance, which means from the next month we start cash, that how much cash left in our account, 33,300. And then you start different transaction, and at the end you again balance out. Understand? So how this 10,000 came from balance? You add it, you find out that the credit side is how much greater than the debit side? 10,000. So the carry forward balance or the closing balance of service account, revenue account is 10,000. Similarly with the account payable, how much is the balance of our accounts payable? Which side is greater? The credit side. How much? It is 1,800, right? So you can say that now our balance, that how much we have to pay our liability, our account payable balance is 1,800. It means this balance we still have to pay. It's not paid by us. We will pay later, right? Now our accounts receivable, which is our customers. So this account tells us how much we still have to get from our customers. And how much our customer has paid? Our customer has paid only 1,000. And what is the balance? Balance left 2,000, which means 2,000 worth of dollars, or $2,000 still our customer have to pay us, right? Supplies, land, how much land we have in our account? 18,000. Now the business owns right now 18,000 worth of land. So now you know that where this balance came from? Everyone? Ajim, Jordan,
Yes.
David, Junpyo,
Yes.
Minsu, Sipaday,
Yes.
Pinky.
I got it, but can we have the break now? I'm kind of losing my focus. Can we have a break, or you plan it for later?
I think just wait for like 2 or 3 minutes. We're gonna have a break.
Okay, perfect. Thank
Okay.
you.
So
Yeah, thank you.
all the discussion that we have done right up till now, we're just going to repeat it. That is, so this is called the accounts after posting the ledger or closing the account, and how we are going to close that. So this is the bigger picture of this discussion. So how we are going to balance this, and what is the balance or what is the closing of this cash account? You see here how we make a balance here. So it means debit side is greater than credit side. How much? 33,000. So this is the asset side, liability side, and this is the owner's equity side. That's it, right? Okay, we are taking a break. After the break, we will do our breakout room exercise of this illustration. Okay, let's take a 10 minutes break. And then,
Okay, thank you.
okay, take care.
Can I ask you one question? Could you go back for a second?
Here we go. Yes. Which slide?
Yeah, the accounts payable. So what do we usually consider accounts payable?
Accounts payable, we consider that they are our suppliers who supply us.
Oh, okay. So anything from suppliers, right?
Raw material, or from where we, if you are merchandiser, you purchase goods.
Okay, understood. No questions.
Okay.
Thank you. 10 minutes, right?
Okay, yeah. 10 minutes break, then we start again. Okay, guys, welcome back after a break. Okay, now I'm setting up the breakout room. All you have to do, you have to make the journal entry, and also you need to post to the books. Okay, please take a picture. Here we go. Please accept your breakout room request. Here we go. So we'll be coming back. I'm going to be resuming the recording after once we come back from breakout room. Okay, stay with us. Okay, welcome back after a breakout room. I hope you already analyzed this. So let's talk about its solution, and you tell your answer here as well. If you find anything that we talk about here, please do ask. So let me read this illustration. It says, the architect Wendy Lim purchased supplies on account. Later, Wendy paid $1,400 on account. Generalize the two transactions on the books of Wendy Lim architect. So there are two transactions. First, the owner purchased the supplies on account. Supplies increase. Increase means supplies are asset. Increase means debit. On account means you have to create liability. Liability increase mean credit. So it would be supplies to accounts payable, right? Debit to credit. The second one is later Wendy paid $1,400 on account, which means the business has to pay the accounts payable or supplier 5,000. Among 5,000, the business retire or business paid its 1,400 liability. So paid, which two accounts are going to be used, a cash and accounts payable, right? So you paid, cash decrease in credit, liability decrease mean debit. So accounts payable to cash. To match your answer here, right? And now how many accounts we need to open? Supplies, accounts payable, and cash, 3 accounts. We have cash, accounts payable, supplies. So first supply is going to be debited 5,000. So there is no transaction here. So I don't write transaction number here. Accounts payable is credited with first 5,000, and second cash is credit 1,400. Accounts payable is debited 1,400. So what is the balance here? The balance is 5,000. Sorry, I don't need to. So balance is 5,000. But you need to write down the balance here, BAL, at least BAL. Right? So here, which one is the greater side? Of course, the credit side. How much is the balance here? 3,600, right? And here the balance would be 1,400 as well. This is what I required from you. So let's see its solution here. See, we created two accounts here. Accounts payable. How much still we owe? 3,600 we still have to pay to the suppliers. Right, everyone? Any question? David, Jordan, Ajim, Sipade?
I only had one question.
No.
Yes, please.
Thanks to my group mates, we did it correctly. But at first, I thought that the $5,000 transaction belonged to account receivable, since we did with the suppliers, right? Does it
David,
make
you are
sense?
confused, right? You are confused with one stuff. Let me clear your confusion here. Read the question here. You read it, please. The first line.
Architect Wendy Lim purchased supplies on account for $5,000.
Right? So
Yeah.
business purchase supplies. Of course, the other party would be someone who supply these supplies. And that party is supplier. It's not
Yeah.
the Wendy Lim sells supplies. It purchases the supply. It means the other party would be supplier. And suppliers are our liabilities. We have to pay them. Since this is on account, on credit, so these are our liabilities. Right?
Yes. Yes.
Now read the other line.
Later, can you hear? Yeah. Later, Wendy paid $1,400 on account.
So Wendy is who? The owner of this architect Wendy Lim Corporation, right?
Yeah.
Owner paid, not received. So when think of yourself as a businessman, so when you pay, you pay to your supplier or money, or you pay the money to your customers,
To the suppliers.
right? Suppliers. So when you receive on account, it means your customer is paying you. So when you pay on account, it means you are paying to the suppliers. Understand?
Yes.
Now confusion is clear?
Yes.
Okay.
Thanks.
Okay, we have a couple of slides left. How much time we left here? I think, yeah. Here we go. So construct and use a trial balance. Now after generalize the entry, posting it to the ledgers, the next stuff is trial balance. What is trial balance? It's not a statement. It's not a required statement, remember, right? Our required statements are